Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your midday, and I'm going to call this my midday metal report because it's only 1:35 in the afternoon, and this is Tuesday, April 10th, 2018. Remember, we're in Chicago, so that's Central Daylight Time. We are getting a nice bounce in the gold market, the silver market. Copper really came alive today, and that is because President Xi of China made comments today in front of a forum where they are trying to work out their deals with the United States. Now, supposedly an offer was made worth about $50 billion to cut the trade deficit, and as I understand it, the Trump administration doesn't think it's enough. They didn't like how the deal was structured. It's all negotiations, my friend. Everybody's trying to avoid a trade war. That doesn't mean one won't happen. You just don't know. But the word of it kicked the stock market higher. Everyone, you know, this is the forum that and I have written about it in my market information, that President Xi could have easily retaliated against the U.S., but he took the high road, which was a smart move. Keep the doors open. Let's see what can be worked out. Metals like that, obviously the copper likes it because lack of a trade war should mean more demand for the copper market. Energy markets like what they're seeing too. Why? In part, what I think happened was we read later in the day in the news wires that Sinopec, which is the Chinese arm that buys crude oil, Saudi Arabia had raised the price of crude to Asia. They have said that they're cutting back their oil buy for the month of May by about 40%. Well, they still need the oil. Where are they going to get it from? Maybe, just maybe, this is where we're looking at that differential that I keep pointing out in the energies, where U.S. crude is at about a $2–2.5 discount to Brent, offers the opportunity to buy U.S., and maybe that's one of the ways to make up the deficit. Buy more natural gas from us, buy our crude oil, whatever they can do. I feel that this is one of the reasons you're up so sharply today. Now, keep in the back of your mind, you also have the API reports. When we look at the gold market on a weekly basis, and this is the 18-week moving average of closes in the bright red over this gold chart, if you will. Notice how this market really hasn't settled back under since actually late 2017, that average. The market hasn't rushed forward in any manner, but it's not breaking down either. When you come to the daily area chart of closes, I'll call this in an upthrust because the market has just recently gotten back over this 18-day average, and it's now gone from 1328.5, this low close here, and we're going to settle right around this price today, not too far off of it. Remember, settlements in the metals are done at 12:30 p.m. Central Daylight Time, even though the market trades for another 2.5 hours, or 3.5 hours, 3.5 hours after that. Closes at 4 p.m. Central Daylight. What I see in the market, and I'm sure other analysts are seeing this, is all this action here. We can call this the bottom, 1310, a trade top coming in at 1360 or thereabouts, and this narrowing in, just going sideways right through here. When I put a swing line study on, and this is the same chart without it, swing lines are a study I created years ago, and what it does is it allows you to look at a chart and see, number one, is it trending, is defined by, if it's in an uptrend, higher highs and higher lows. In a downtrend, lower highs, lower lows. In this market, we have a lower low and a higher high. That means no trend is at work. I then try to filter, as you've seen, by using moving averages. One of the averages that's been playing a very important role in gold is the 100-day moving average of closes. Recently, each time it's been hit, the market has found support at it. I look for resistance and support points with a very popular tool called Bollinger Bands. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. You don't want to go to 100%. There'd be no point in having it on the chart. You don't want to go too far away because you're not looking for it to be hit all the time. So the popular setting for it is 95% of the time. Right now, the market's nowhere near that. It hit it here. It came down to it as support here, went up to resistance. You'll find that often, not the word always, the first time you hit a Bollinger Band is where resistance on the top side or support comes in. It is not a trend changer. It's where I think pros take money off the table, and I teach that in the charting course that I'll talk about right at the end of this. When I look at slow stochastics, it is a momentum index, and I believe that momentum leads price most of the time. I wish I could say always, but it's not the way it is. Right now, momentum is gradually trying to move up, but it's pretty much still in neutral area. You measure neutral area on this by the 50s being a neutral zone. Both numbers are still in the 50s. Yeah, it's trying to arc up a little bit, but not going anywhere. So what I next do is I often look to see what are the ETFs doing. A lot of traders trade ETFs, and the theory there might be, well, maybe they'll put their money first into the ETF. They don't want a futures contract for whatever reason. But understand, so many of these ETFs in gold, at least the raw material, are looking at futures, and that they'll be balancing their accounts in some way with it. Right now you have lower highs, lower lows. That's bearish. The market's over the 18-day average of closes in red. I define the bias of a market as is the market over or under that number. And when it's over it and the trend is down by the swing line, the two neutralize each other. And I'm stuck right here because, again, momentum is just going flat. I next look at the gold miners. They often lead the market. They have turned bullish. Higher lows, higher highs. Resistance is very formidable, I think, at 2249 to 2252, the combination of the 100-day average and the upper Bollinger Band. In addition, the market is knocking on the door right now of being overbought because one of the numbers is in the 70. So I will not be surprised to see the market try the upside and run into resistance. It's also going very much sideways right here. Eventually, sideways action leads to a move. You break out of it either up or down. Right now, the indicator is the gold GDX is trying to move out to the upside. Whether it'll follow through remains to be seen. I am still of the opinion that you pay attention to history, and in 82 ounces, 82 and a half ounces to buy 1 ounce of gold is historically a very high number. And I can see now that it's breaking down. I'm going to call it in a down thrust. The lower these numbers go, the less amount of ounces of silver you need to get 1 ounce of gold. In the silver itself, the one thing that looks clear to me is the sideways action that you're seeing here. You have a market that's got lower highs and lower lows. But like I just showed, prices are now over the 18-day average. Those two counter each other. Unlike the gold, you're moving momentum to the upside. Now, we have come up recently to the upper Bollinger Band, and the green numbers, the 100-day average, and failed there. Back here, we even got over the 200-day average for a very brief period of time. Looking at silver, I'm thinking that the longer this market bases, if we don't get into a trade war, there could be an interesting play coming in silver. In the copper market, as soon as word came that the U.S. and China weren't fighting anymore, and that began back here at the end of March, copper started coming live. This was the news when President Trump was announcing the $50 billion in tariffs, then possibly another $100 billion. It drove copper down. As that rhetoric toned itself down, the market started coming alive, and each bar represents 1 day, so it's only been about 8-9 days. You are overbought into a very big resistance area, 315, let's call the 100-day average, 314.20 or so in the upper Bollinger Band, and today you got up to the 314.10 area, so you're right into the resistance zone and you are overbought. The platinum and palladium markets have been weak. Is it because we're moving towards electric cars? Is it because the markets are concerned that they're more or less really industrial metals? Maybe a trade war will stop auto sales and so on around the world? I don't know. But I can tell you that the market has been in a pattern of lower highs, lower lows, has hit downside targets. And whenever you have a reading like this, that's called an embedded reading, it occurs after a market gets oversold. It's a bearish embedded reading because both numbers are going sideways under 20. I teach this in the charting course. When the market lifts out of it, it's often a sign that the trend has ended and the market's going to make a run to the 18-day average of closes, which it did not hit on this day, and it hasn't hit it today. The odds strongly favor that it's still going to be hit. We'll see if that happens in the next day or so. Notice where you ran up to on the Palladium market. You lost your embedded reading. Take a look right here. You lost it yesterday. You got to 22.59. That often leads to price in the 18-day average coming together. You're going to say, why the 18-day average? And you should. It's because what's really taken place in this is the market has gotten to a zone of neutrality. And markets like to go to a neutral point. And why? Because moving averages are such a popular tool amongst chartists, people that high-frequency traders. Some way or the other, it's used in many calculations. Not all, but many. And as that comes up, that 949.16 level, you got to 950.10, fell $8 from there. Need I prove my point any further? You've neutralized the downtrend to a degree because now the momentum is turned up, but the overall pattern of the market is still lower highs, lower lows under the 18-day average of closes. The big currency moves are missing in these markets in terms of the euro and the dollar. The dollar's trendless. It tries up, comes down. And notice how it got up here to the upper Bollinger Band, slipped back, eventually hit the lower band, and it's just really trading against this 18-day average of closes as it's looking for a move. That's not the case, though, in others. The yen is in a downtrend against the dollar as an example, the Canadian dollar in an uptrend. Look at the Aussie dollar today with the idea that there's some news that's happening out of China. As I said, my charting course teaches a lot. Now, let me explain it. 6 hours of videos. You see each of the indicators I use here, plus one that you don't see called the window envelope. I walk you first through a PowerPoint. You learn how to do them. Then I take you into an actual chart. And we go to a point in time back, obviously, because you're going to get the same chart data that we use. And your data, by the way, goes forward right up to today as well. But you're going to see it. You're going to learn what I do. You're going to do the same thing. And you're going to learn each one of these indicators, how they build on each other, and they filter each other out, or they filter into a trade. Doesn't mean the trade will work at all, but they're filtering out. What the idea is to try to find a reason not to make a trade. If all the reasons are there to make it, you make your trade, I guess. You'll decide what you do. Then I give you fresh videos every morning. Today's action. 8:30 in the morning, I record it to get your day started in trading, and then a live webinar so that you can ask questions of me, and we're holding those now more and more. The whole course, including the charting software, the videos, the market research, $129.95. I think you'll find it to be of value. Give us a call. Go to our website under the word education. You'll find out more about it. You can click up here if you're watching on YouTube. It'll take you right there, and underneath us on many websites says click here for Ira's free information. I'm Ira Epstein. You have yourself a good day, and I'll see you all tomorrow.